Welcome to Cardano Daily, where you can get the daily rundown on what is happening with ADA and Cardano blockchain, whether it be price movements, events, or new innovations coming to the blockchain. If you want to stay up to date on the latest Cardano news, please consider pressing that like button. The current decline in the price of Cardano may seem concerning, but let's take a step back and analyze the bigger picture. By looking at the weekly chart and considering the overall market cycles, it becomes clear that Cardano is right on track. It's important to approach this analysis without any emotional bias or false hope. I want to provide you with an objective perspective based on data. And let me tell you, the data is incredibly bullish for Cardano. The current downward movement in the crypto market is completely normal and expected. It's just a part of the natural cycle. But what's important is to focus on the long-term potential of Cardano. And from a data perspective, it's looking very promising. So, don't let the current price fluctuations discourage you. Instead, see it as an opportunity to invest in Cardano at a favorable price. The data supports the idea that this is a really good time to do so. Trust in the facts and make an informed decision. Remember, emotions can cloud judgment, but data doesn't lie. And the data is telling us that Cardano is on the right path. Take advantage of this moment and seize the potential that Cardano holds. This is not an attempt to spread false hope, but rather a presentation of the facts based on data. It is crucial for me to emphasize this point and share it with you. So, please consider subscribing, liking, and let's delve into the video together. Bitcoin's halving events provide crucial insights and serve as a fundamental roadmap for analyzing any cryptocurrency chart, including altcoins. Understanding the cycles of Bitcoin is essential because it sets the tone for the entire crypto market. As I always emphasize, Bitcoin's halving events are pivotal moments that shape the industry. Now, let's delve into the data surrounding these halving events. By examining the charting data, I become even more optimistic about ADA, a promising altcoin. The charting data not only confirms this cycle's bullishness but also indicates that Cardano is surpassing its performance from the previous cycle. To illustrate this, let's focus on the halving data. It's worth noting that we are currently approximately 77 days away from the next halving event. If we look back at the previous cycle, around 77 days prior to the halving, significant developments occurred that had a profound impact on the market. By analyzing historical patterns and considering the upcoming halving, we can gain valuable insights into the potential trajectory of ADA and the broader crypto market. This information positions us to make informed decisions and capitalize on the opportunities presented by this cycle. In conclusion, understanding Bitcoin's halving events and analyzing the charting data is crucial for navigating the crypto market successfully. By recognizing the significance of these events and studying the patterns, we can identify bullish opportunities and stay ahead of the curve. Let's take a step back and reflect on the events of the past few weeks. It's important to acknowledge that we experienced a significant black swan event during that time. However, we can remain hopeful that we won't encounter another one this year. So far, we've been fortunate enough to avoid any major disruptions. Now, let's focus on the recent market movements. If we go back just a few weeks, we can observe a similar pattern to when we exited the bear market. However, it's crucial to note that this time, the charting data and technical analysis reveal a different setup. This indicates that we are heading in a new direction. Comparing the price range from the swing low of the bear market to the swing high, we see an increase of approximately 140%. In contrast, this time around, the swing low to swing high shows a growth of around 170%. These numbers demonstrate the positive momentum we are currently experiencing. Let's remain optimistic about the future and the potential for further growth. The data suggests that we are on the right track this time, and I believe this will be evident to all through the unique charting setups and technical analysis. The significance of charting data cannot be overstated. It is the key to understanding trends and making informed decisions. In the case of evaluating the Bitcoin market, there are three crucial aspects to consider. While we have analyzed the Bitcoin halving from a historical perspective, there is a notable difference this time around. It is the powerful move to the swing high post-Bitcoin halving that holds immense importance. This move, as indicated by the higher swing high for ADA, signifies the current phase we are in. By recognizing and studying this move, we can gain valuable insights and capitalize on the opportunities it presents. You can clearly see the movement on the chart. The swing high occurred after a bit, following the Bitcoin halving. Let's analyze the momentum of this move by looking at the RSI. The RSI is a slower moving momentum oscillator. When we examine the overbought condition, we can see that ADA was just in this swing high. By observing the momentum of the last cycle after the Bitcoin halving, we can see that it did not approach overbought territories and lacked bullish momentum. However, the move post-Bitcoin halving did exhibit this bullish momentum, which is similar to previous cycles. Each time on the RSI, just above 80, before topping out, it is normal for any cryptocurrency to hit overbought levels and then cool down. In the last cycle, it cooled down to around the 55 to 50 range on the RSI, indicating that there is still room for downside movement. On the daily chart, ADA is currently hovering around 50, and we hope to see support at this level. It is important to note that this entire move is happening much earlier than in the last cycle. Indeed, there is still some room for downside on the RSI. However, let's also consider the significance of the moving averages in this analysis. The crossing of the 20-day moving average above the 50-day moving average is a crucial turning point from a bear market to a bull market. Similarly, when the 20-day moving average falls below the 50-day moving average, it indicates a shift from a bull market to a bear market. We have experienced and survived these market cycles before, and now we are entering a new one. Comparing the current situation to the previous Bitcoin halving cycle, we can observe a similarity in the moving averages. However, this time it is happening earlier in the cycle. If history were to repeat itself, we would only be witnessing the 20-day moving average crossing the 50-day moving average around the time of the Bitcoin halving. The fact that it is occurring earlier this time is worth noting. Indeed, there is still some room for downside on the RSI. However, let's also consider the significance of the moving averages in this analysis. The crossing of the 20-day moving average above the 50-day moving average is a crucial turning point from a bear market to a bull market. Similarly, when the 20-day moving average falls below the 50-day moving average, it indicates a shift from a bull market to a bear market. We have experienced and survived these market cycles before, and now we are entering a new one. Comparing the current situation to the previous Bitcoin halving cycle, we can observe a similarity in the moving averages. However, this time it is happening earlier in the cycle. If history were to repeat itself, we would only be witnessing the 20-day moving average crossing the 50-day moving average around the time of the Bitcoin halving. The fact that it is occurring earlier this time is worth noting. Indeed, there is still some room for downside on the RSI. However, let's also consider the significance of the moving averages in this analysis. The crossing of the 20-day moving average above the 50-day moving average is a crucial turning point from a bear market to a bull market. Similarly, when the 20-day moving average falls below the 50-day moving average, it indicates a shift from a bull market to a bear market. We have experienced and survived these market cycles before, and now we are entering a new one. Comparing the current situation to the previous Bitcoin halving cycle, we can observe a similarity in the moving averages. However, this time it is happening earlier in the cycle. If history were to repeat itself, we would only be witnessing the 20-day moving average crossing the 50-day moving average around the time of the Bitcoin halving. The fact that it is occurring earlier this time is worth noting. The key takeaway from this is that ADA is showing stronger movement earlier in this cycle compared to the previous one. Additionally, the data indicates that ADA has experienced a dip of around 55% in the previous cycle, whereas this time it has dipped around 33%. This suggests that ADA is following a similar pattern as before. It is important to note that this may or may not happen, but if it does, it would be in line with what ADA did in the last cycle. Furthermore, other altcoins like Bitcoin are also approaching oversold areas, indicating a potential bounce. It is worth mentioning that in the previous cycle, ADA did not fully return to the trend line or the apex of the triangle, but instead consolidated between the 20 and 50 levels. That's the Cardano Daily News for the day. Thanks for tuning in.